Assalamu alaikum viewers. We are in the third lectures of accounting cycles. This is the English version. In the first lectures, we have discussed already that the accounting consists of two big registers. One is the general journal and other is a ledger. Ledger consists of many ledger account, and in the second lectures we discussed the accounting is a process of recording, classifying, summarizing, and reporting transactions to stakeholders, particularly external stakeholders. Then we have already discussed the three basic financial statements, which are called balance sheet, income statement, and cash flow statement, which required to do the analysis. I am Dr. Safdar Husain Tahir, Associate Professor, Lalpur Business School, Government College, University, Faisalabad. I did postdoc from UWA Business School, the University of Western Australia. The third lecture is regarding the accounting equation. Actually, accounting starts from this equation, that is assets is equal to liability and owner equity. This is the accounting equation. Accounting equation will tell you the story that the total assets is equal to total liabilities plus owner equity. If we want to elaborate this equation, it becomes a balance sheet. So the balance sheet is an elaborative form of total assets, that is the assets, liabilities, and owner equity. But in a balance sheet, there are details of the assets. Some are the current assets, others are the non-current assets. These are the total assets. Then the other sides of the balance sheet is the liabilities and stockholder equity. I mean owner equity. Liabilities, these are the liabilities, and then there is the you can say is stockholder equity. So we can say if we want to get an elaborative forms of accounting equation, this is which is you can say is called a balance sheet. So how to make the transactions? Transactions maybe some assets going up, other assets going down. Maybe this is the transaction. Transactions are maybe some assets going up and equally liabilities or owner equity also going up. This may be a transaction. The third form of the transaction is the asset. Some assets goes down, and in accordance with these assets, liabilities and owner equity may goes down. Then maybe we pay some liabilities, and the liabilities or owner equity going down, and equally liabilities going down or owner equity going up. These are the forms of transactions. We can easily extract the rules of debit and credit by these transactions. You can say this is very easy. This is the asset sides of the accounting equation. Increase in asset is debited. Similarly, decrease in asset is credited. Now, on the other sides of the balance sheet, increase in liabilities or owner equity is credited. Reverse to the increase in asset that's are debited. Decrease in liability or owner equity is debited. And revenue is always credited and expense is always debited. These 6 rules are the basic rules of debit and credit. Why the impact of revenue and expense on owner equity? Expense, in fact, decrease the owner equity, that is debited. Revenue increase the owner equity, that is credited. So the debit and credit of the revenue and expense is been calculated as the impact on them on owner's equity. Thank you very much for watching this video. This is the second lecture, and I hope you can understand the debit and credit rule. This is Dr. Safdar Husain Tahir, and this was our third lecture of accounting cycle. Thank you so much.